I've stopped looking at the micro. I've stopped looking at the week ahead. I mean, you can talk about all the numbers that come out of the BLS, which should just be called the BS. I've stopped looking at the effect of those numbers, because the numbers that come out, whether they be unemployment or really any of the numbers that, including inflation, they're a lie or they're readjusted quietly a month or two down the road to show truth, where all of these jobs that are supposedly created are actually revised to negative. You look at the birth-death model that came out last month, where the birth-death model is how many companies started versus how many companies died, and they added like 280,000 jobs, something to that number. It's a guess, right? A total guess. And the number of jobs that they say were created was like 115,000. Now, I'm going to be off on these numbers because I talked about it a week or two ago. But so you say 115,000 jobs were created, but you're guessing that 280,000 were created. So what if you didn't guess that and you just went by fact? Well, in essence, we're negative 165,000 jobs just flat out before the guess. And the guest says, no, we're actually plus 115. And then you look next month and they'll say, oh, we were wrong about that number. We've only created like this many jobs. So I don't know. I think you look at a bigger picture. And I think to get too tangled up in the short-term minutia, looking at the leaves instead of the forest, I think is a mistake. I look at the big picture. And the big picture is that over time, the dollar is going to lose value dramatically. And the Cantillon effect is a very, very good lesson in that the people closest to the money supply benefit disproportionately, because the ones that are able to use the money first and buy assets with it benefit the most, because by the time the money and the inflation that ensues gets down to Main Street, it's lost much of its value, much more of its value than those who bought it first and were able to use it before the inflation started to debase the currency. Those people benefit substantially, and they do so by buying assets. And you can see that in looking at gold. Look at it over the past 25 years. It's outperformed everything quietly instead of holding it in dollars. And I talk a lot about house values. In 2005, a house in the United States was $240,000 and gold was $450. It's about 530 ounces, right? So today that house has doubled. It's $500,000. You've done well. You doubled your house value in 21 years. But those 530 ounces that have sat under your mattress for 21 years earning nothing but dust have gone up fivefold, quietly gone up fivefold. So in dollar terms, most assets have done quite well. In gold terms, it's a whole different story. Assets have fallen in value. So what that really means is that the dollar by which we measure things in is falling faster than anything. And it's blurring the way that we value things arbitrarily. Don't value things in dollars, value them in gold. And you'll see that even without the interest, it's outperforming just about everything, as it has for thousands of years. And to me, that's a big picture. I don't get caught up in the minutia. I just look at where we're going to be down the road. And to me, that's gold and silver. And I say that regardless of being the owner of a metals company. I mean, I think proof is in the pudding. And I think, the worst thing people can do is to hold too much in the way of dollars. And that's the craziest thing. I don't think I ever would have said something like that, but it's true. Because the dollar is like a melting ice cube in your clenched fist, where gold is quietly, like the tortoise in the race with the hare, just somehow seems to be at the finish line in the end. So don't get tied up in the noise. Look at the big picture. Look at what the biggest money in the world is doing. Remember, Goldman Sachs just revised it by a double. Oh, they're actually purchasing twice as much as we thought. They know where the story ends. If you're a JPMorgan trader, you trade 10 million ounces of silver, you buy the contracts, you exchange for physical, you send them to Hong Kong, which then move to Shanghai by truck. At $10 an ounce premium, you've made $100 million. So they are making it very enticing for the Western traders to siphon off what is left. And you can see that in China's import numbers. In the month or the first quarter of the year, China imported more silver than at any time ever in history, ever. And I just think that when you look at 158 million ounces of silver that have been withdrawn out of COMEX since through April, metal is leaving COMEX, metal is moving to China. Who's taking 158 million ounces out of COMEX? Where's it going? Big deliveries so far this month. In May, gold deliveries through the 22nd are at 663,300 ounces times 4,600 bucks. I mean, that's $2.4 billion. 28,520,000 ounces of silver through May 22nd. At 75 bucks, about $1.5 billion or whatever. I mean, so every month we're seeing this. These are the most well-informed people in the world. So someone is importing it here. The traders are exporting stuff to bankrupt this country, in essence, the dummies, and enrich themselves. It just goes to show you that, as far as I'm concerned, the West looks at gold as a trade, or the traders do. The East looks at gold as a settlement asset. And the Middle East looks at gold as sovereignty. And you can see that as Saudi Arabia, they're kind of sitting at the center of all of this. And as a major oil power, part of the BRICS conversation, increasingly tied to China, and they've been buying more gold than ever right now. And you see massive gold moving from Switzerland into Saudi Arabia, record-breaking volumes. And then ask yourself, why the hell are they doing this? They're doing it because they realize that there are very few neutral reserve assets. This is the one that I think is being chosen through action, less through words, but more in action. Those are the flows that I would focus on, and the rest of it to me is just noise.
Let's pause here. Several critical market pieces just click into place. First, chasing monthly economic reports ignores the real trend. While fiat currencies steadily lose purchasing power, hard assets like gold quietly preserve and multiply wealth over the long haul. Second is global elite capital is already positioned for this shift. Central banks are aggressively accumulating gold. Physical metal is rapidly migrating from west to east. Massive silver volume is fleeing major Western exchanges. Finally, this has evolved beyond a simple price rally. Physical silver now commands massive arbitrage premium between different global markets. This price disconnect points to a much deeper reality. We are likely witnessing the early stages of a global run on physical metals, happening right before the mainstream public wakes up.